MTN's share price has come under pressure this week as the market was rocked by the news that termination rates in Nigeria could fall by as much as 40%. Concern that this development could induce a price war in Africa's largest cellular market has sliced billions off the company's market capitalization. Fred Teeling-Smith from Stanlib joins us to discuss the consequences. Well, how are you feeling with regard to MTN right now? That's a big negative amount of news flow.
It is, Bronwyn. I mean, I think MTN, it's quite a frustrating company. Every time you think they've just cleared a little bit of bad news, something else comes and gives the share price a bit of a whack in the market. The latest being the regulator indicating they're going to cut the termination rates in Nigeria by 40%. I think the market had been expecting a cut, certainly in the order of 20%, and I think they were probably expecting it 12 months down the line. So last year we had quite an intense pressure in the Nigerian market where a lot of the competition had forced the prices down that were being charged in the market. MTN was slow to react, and we saw it in their numbers, so their revenue growth slowed. In August, September, they effectively cut their rates by 30 or 40% to become probably the cheapest in the market in terms of a rate perspective. Their revenue growth has recovered since then, certainly from September being a trough from a growth perspective month on month. Ever since then, their monthly revenue has started to increase again. So it just looked as though we were coming out of that trough period for MTN, and then we get the regulator that chops MTRs by 40%. It doesn't necessarily mean that we're going to go into another price war, because what it does do is MTN was sort of close to 50% market share, probably mid-40s. They are certainly very profitable in the market. The other competitors, Etisalat and Glow and Bharti, from a cash flow perspective, they're struggling to make money. They're not necessarily cash flow positive once they've spent their money on capex in the ground. So what this rate cut does give them is a little bit of headroom in terms of profitability. So my expectation in terms of what will happen in the market, I think we'll probably see some price cuts coming through. I don't think we'll see the full price cut being passed on to the market. I think it will give Bharti and Etisalat certainly the opportunity to make a little bit more money in the market and actually say, well, we want to get a bit more of a return out of this market. It's a balancing act because at the same time they also want to attract new customers. And how do you do that is by lowering your prices. So until we see how the competitors will react, MTN are certainly not going to cut their prices first. But they are spending a lot of money on capex, expanding their network. They've had some network quality issues, which has been holding back their growth in the market. They spent a lot of money last year putting up base stations and expanding their network, and they've indicated to the market they're going to spend a lot of more money this year.
Let's talk a bit about the share price at 168 or thereabouts. We're still tracking just under the all-time high. What did it hit? 180?
I think 174.
174.
Yeah.
Is there more upside? I mean, should you have sold it? You know, we never try and time the market, but at 174, at that all-time high, shouldn't you have taken your money and run?
Bronwyn, to be quite honest, I think from MTN's perspective, relative to its rating in the market, there's a lot more upside. So we've seen the industrial index being pushed up and the PE multiples on the industrial index being pushed up remarkably. MTN's really done nothing, if you look at it. So its multiple has effectively remained flat. In the meantime, it's indicated to the market that it's going to pay out more of a dividend. It hasn't been as aggressive as Vodacom, and you see by paying out almost 100% of the earnings that Vodacom pay out, you see the reaction the share price has had. So that's almost behaving like a bond backstop. You get single-digit growth, and you've also got sort of high dividend yield coming through. Now, MTN is going through that life cycle. Obviously, it's still in a growth phase in Africa, so it can't pay out 100% of its earnings. It's also got earnings trapped in Iran and Syria. It can't extract that money, so it's never going to pay out 100% of its cash flow in the short term.
So just let's turn our attention to what it's doing with that money, Fred. Obviously, you mentioned opportunities in Africa. Where else are they expanding now? And are these mobile telephone networks now evolving from voice carriers into data carriers in Africa in the same way that Vodacom's been doing locally?
Yeah, I mean, if you look at MTN, it's got a footprint of 21 countries in Africa and the Middle East. For me, it's still really all about Nigeria. Yes, some of the other markets, if you unpack some of the other markets, they're growing strongly. It's still really about Nigeria. Voice is important in Africa because the penetration rates are still not at their peaks. So yes, we're going to get voice growth. On the back of that voice growth, what we've seen is all the undersea cables being put in around Africa. Now that opens the opportunity for data growth. We don't have any fixed line networks in Africa. So there has to be data growth. The only people to carry the data are the cellular telephone networks. In Nigeria now in the last year, 2012, their data grew at 140% compounded, off a very low base admittedly. They still have a lower data revenue number than South Africa, but it has to be that is going to support the revenue growth going forward. So voice pricing is going to be under continual pressure in Africa, but data, in my view, is sort of going to support the revenue growth going forward.
Given that you think there's more upside to the share price, one for the bottom drawer, I keep asking this question, but buy it now, look at it in 5 years' time.
It has to be a 5-year view if you look at Africa. I always keep telling our guys internally at Stanlib that you need to be able to answer the question, are you comfortable with investing in Africa? Do you believe in the Africa story in terms of sustainably higher GDP growth for the medium term? If you can't tick that box, then don't go anywhere near MTN. If you're happy with that answer, then MTN has to be one that you have to own.
Fred, just to come back and bring it into South Africa, obviously Alan Wood-Craig's been at the helm of Cell C for a while now. Is he making a dent into the market share of the three big cell phone providers here?
Market share wise, not yet. He certainly had an impact on pricing. So we've certainly seen him putting pressure on Vodacom and MTN.
So he's gone to war.
He's gone to war in terms of pricing. It's had a bigger impact on the data pricing than the voice pricing, although recently we've seen those 2 cents per second rates that the cell phone operators are giving into the market. So it has lowered the voice pricing as well, but where it's had the most impact is around data. So the consumers are getting more for their money. The objective with Vodacom is really to bring prices down, but encourage consumers to consume a lot more for a little bit more. So ideally they want to still grow their revenues in South Africa by a couple of percentage points. But ultimately what that means is the capacity of their networks has to carry on growing to support the growth in volume of data.
I think we wanted to chat, Bronwyn, and with Fred while we've got you around SAB Miller and the ultimate defensive counter, if you could call it that. A very big company already. There's talk that there are opportunities still for the company to grow in Africa and Latin America. What's your take on that business case there?
Yeah, certainly Africa, I guess, is an overplayed theme from a share price perspective, especially amongst the retailers. But if you take a step back and look at MTN with its Africa exposure, SAB is another company that has got significant Africa exposure. When they expanded their roots beyond South Africa, Africa was really where they started expanding first, and then they went more globally. They've almost come back into their home ground advantage, said actually Africa, there's potential for Africa, huge potential for Africa. But if you just take a step back and have a look at how much beer they sell in South Africa, it's close to 27 million hectolitres. In their countries that they actually control in Africa, they're selling 17 million hectolitres in the rest of Africa. So they sell a lot more beer in South Africa than they do currently in Africa. And they've got exposure to a greater population base. The per capita consumption in Africa for beer is around about 8. If you have a look at the global average, it's 35. If you have a look at in North America, it's sort of closer to the 75. So that 8, all that 8 has to do is double, and immediately we've got a doubling in the revenue for SAB in Africa. And they're spending a lot of money on expansion into Africa as well.
And that's obviously going both at a physical level, expanding their plants and capabilities, and are they acquiring as well?
Yeah, there's not a lot of acquisitions left for them in Africa. What they went through, there was a lot of privatization in the early 90s where they acquired a lot of local breweries and effectively put their own expertise in. Now what they're doing is mostly greenfields expansion in the countries they currently operate. The one country which they don't have a big presence is Nigeria. So for me, that's the one big opportunity, but it's probably the more difficult opportunity for them than the other countries like Tanzania, Mozambique, and the ones that we know well that they've been
So does it
operating.
deserve the, what do you call definition?
Blue chip defensive.
Yeah, of the ultimate defensive stock?
Absolutely. If you look at its footprint, it's got its exposure to North America, which is stable. It's come out of our recession now, so we're starting to see profitability growth come out of there. Latin America, the markets they operate, Colombia and Peru, they've got over 90% market share. Whenever you have that, you're in a very dominant position from a making money perspective. once again, per capita consumption in those two markets is a lot lower than a country like Brazil, which ABI operates in. So significant room for encouraging people to drink a lot more beer in those markets. They've got a recent acquisition down in Australia, Foster's. A little bit of a controversial acquisition at the time from the market. Some people thought that they were diluting their emerging market exposure by going into that market. Europe is obviously a bit of a basket case for them, but they are exposed to Eastern Europe, so less impact in terms of sort of the Central Europe, where sort of France, Italy, and going through the major pressures.
So
but
again,
and then once again also Asia and Africa. So if you look at it as a parcel, it gives you sustainably superior growth for a long time.
and we had all-time highs on SAB Miller
Absolutely.
right now. Still a good buy.
It's on all-time highs relative to the overall market. Obviously, the overall market has ramped up, and SAB is trading at a premium to the other breweries internationally. I think it deserves that premium. If we see an overall collapse in the market, SAB will decline. But while the market remains at these elevated levels, SAB is a stock that, in my view, once again, it is for the bottom drawer.